When you're self-employed, you're the boss, and the HR department, the CFO, and pretty much everything in between. You wear all the hats. If you don't set up a retirement plan, no one else will. There isn't a corporate structure to fall back on, no automatic enrollment, no company match. There's no company automatically saving for you. It's all on you, and that can feel daunting. But that's not a reason to panic. It's a reason to get intentional and take control of your financial destiny. You have the power to build a future most people only dream of, a retirement where you call the shots, but it won't happen by accident. It requires planning, dedication, and a little bit of know-how. Your future self is counting on the decisions you make today. They're relying on you to secure their comfort and well-being. Many self-employed folks get overwhelmed by terms like SEP IRA, Simplified Employee Pension Individual Retirement Account, and Solo 401k. These acronyms can seem intimidating at first glance. It sounds complicated, but it's not. Don't let the jargon scare you away. These are just tools. Learn how to use them, and you're set. Think of them as instruments in your financial toolbox. The government has created retirement plans with huge tax advantages for small business owners and freelancers, recognizing the unique challenges you face. Today, we'll break down the Solo 401k, exploring its features and benefits, and the SEP IRA, two powerful options for building your retirement nest egg. One might fit your situation better than the other, depending on your income, your business structure, and your long-term goals. We'll look at how they work, how much you can contribute, and who they're best for, giving you the information you need to make an informed choice. This isn't rocket science, it's about learning the rules so you can win the retirement game. You can't afford to ignore retirement planning. Procrastination can be costly. Every day you wait, you lose the power of compound interest, that magical force that grows your wealth exponentially over time. The sooner you start, the less you have to save each month, and the more your money works for you, generating returns while you sleep. By the end, you'll have the clarity to make a smart, confident decision for your business and your future, setting you on the path to a secure and fulfilling retirement. Let's make sure your hard work pays off in your golden years, allowing you to enjoy the fruits of your labor without financial worries. The Solo 401k is in many ways similar to a corporate 401k plan that you might find at a larger company. It offers a structured way to save for retirement with some very attractive tax benefits. But crucially, it's specifically built and designed for a business owner who doesn't have any employees besides themselves, or perhaps their spouse who is also involved in the business. The real power of the Solo 401k comes from the fact that you get to contribute to it in two different ways. You contribute as both the employee and as the employer, effectively doubling your savings power and accelerating your journey towards a comfortable retirement. For 2025, as the employee, you can contribute up to $23,000 of your pre-tax income, and if you're 50 years of age or older, you can add an additional $7,500 as a catch-up contribution. Then, as the employer, your business can contribute up to 25% of your net adjusted self-employment income. This is where the potential for significant savings really kicks in. When you combine both the employee and employer contributions, your total contributions can't exceed $69,000, or $76,500 if you're 50 or older and taking advantage of that catch-up provision. This high contribution limit is precisely why Solo 401 KAs are such an attractive option. It's a particularly powerful tool for high-income self-employed people who are looking to maximize their retirement savings. You also have the option to choose a Roth Solo 401k, which allows you to pay taxes on your contributions now, but then enjoy completely tax-free withdrawals in retirement. So, if you expect your tax rate to potentially rise in the future, the Roth option can be a very powerful way to lock in tax-free growth on your investments for the long term. The Solo 401k really is a game changer for retirement planning, especially for those who are serious about maximizing their retirement savings potential. If you take the time to learn the rules and understand how it works, you can shelter a huge chunk of your income from taxes each and every year. And that's ultimately how you build wealth faster and more efficiently. Now let's talk SEP IRA, the Simplified Employee Pension. It's designed for easy setup and maintenance, making it a favorite for freelancers and small business owners. Only the employer, that's you, makes contributions. No employee side. For 2025, you can contribute up to 25% of your net adjusted self-employment income, capped at $69,000. Hitting that max requires a high income, So for modest earners, the SEP IRA may limit your contributions. The big selling point? Simplicity. You can open one online in minutes with minimal paperwork and no annual IRS filings if you have no employees. No catch-up contributions for those 50 plus, no loan provisions, and no Roth option. All contributions are pre-tax, and withdrawals in retirement are taxed as ordinary income. If you want a set-it-and-forget-it plan, the SEP IRA is hard to beat. It's simple, effective, and gets the job done. But it lacks some flexibility and features of the solo 401k. Choose based on what matters most to you. Let's compare how much you can save with each plan. Both have a $69,000 contribution limit for 2025, but the path to get there is different. With a solo 401k, you can contribute up to $23,000 as an employee, plus up to 25% of your net income as the employer. This is a huge advantage for moderate earners. You can save more even if your profits aren't sky high. The SEP IRA only allows employer contributions. Up to 25% of your net income, capped at $69,000. No employee contribution means your ability to save is tied directly to your business's profitability. If you're 50 or older, the solo 401k lets you add a $7,500 catch-up, raising your total to $76,500. The SEP IRA has no catch-up. $69,000 is the hard cap. For those playing catch-up or with moderate incomes, the solo 401k is the clear winner. The SEP IRA shines for high earners who want simplicity. Know your numbers, and pick the plan that lets you save the most. The main reason to use these plans? Tax advantages. Both let you contribute pre-tax money, lowering your taxable income for the year. Your investments grow tax-deferred, no annual taxes on dividends or gains. You only pay taxes when you withdraw in retirement, ideally at a lower rate. Who's eligible? Anyone with self-employment income and no full-time employees other than a spouse. Even side hustlers can open one, and you can contribute to both a workplace 401k and a solo 401k or SEP IRA. The solo 401k also offers a Roth option. Pay taxes now, enjoy tax-free withdrawals later. The SEP IRA is pre-tax only. Tax diversification is powerful. Mixing pre-tax and Roth accounts gives you flexibility in retirement. Use these plans to keep more of your money working for you. Let's get practical and dive into some real-world scenarios. We'll explore a few examples to illustrate when a SEP IRA or a solo 401k might be the better choice for you, depending on your income, age, and savings goals. First, let's consider Sarah, a new freelancer. She's earning $60,000 annually and is eager to save aggressively for her future. With a SEP IRA, based on her income, she could save approximately $12,000 each year. However, with a solo 401k, she could potentially contribute up to $23,000, almost double the amount possible with the SEP IRA. This is a significant difference. So, for individuals with moderate incomes who are looking to maximize their savings, the solo 401k is often the clear winner. Now let's look at Mark, a 52-year-old consultant. He's earning a substantial $350,000 per year and wants to max out his retirement savings. With a SEP IRA, his contributions would be capped at around $69,000 annually. However, the solo 401k, especially with the catch-up contributions allowed for those over 50, lets him save up to $76,500 each year. Therefore, for high earners over 50 who want to take advantage of catch-up contributions, the solo 401k wins again. Finally, let's consider Maria, a writer who dislikes paperwork and complex financial procedures. She just wants simplicity and ease of use. For Maria, the SEP IRA is perfect. It's easy to open, simple to fund with minimal ongoing requirements, and doesn't involve a lot of extra administrative hassle. In summary, if your primary goal is to achieve maximum savings and you're comfortable with a bit more complexity, the solo 401k is likely the best choice. On the other hand, if you prioritize simplicity, ease of management, and minimal paperwork, the SEP IRA is your friend. Ultimately, it's about matching the plan to your individual priorities, whether that's maximizing savings power or prioritizing ease of use and straightforward administration. Both the SEP IRA and the solo 401k are excellent tools for self-employed individuals. Just pick the one that best fits your personal style and financial situation. Don't overthink it too much. The most important thing is to get started and then adjust your strategy as you learn and grow. The right plan is the one you'll actually use consistently. Your future self will definitely thank you for taking action now and investing in your retirement. Every tool has pros and cons. The solo 401k offers higher contribution potential at moderate incomes, a Roth option, catch-up contributions for those 50 plus, and even loan provisions. The downside? It's a bit more complex to set up and manage, and you need to open it by December 31st of the tax year. If your plan assets exceed $250,000, you'll need to file a simple annual IRS form. The SEP IRA's biggest pro is simplicity. Easy to open, minimal paperwork, and you can fund it up to the tax deadline, even with extensions. It's great for high earners who want a no-fuss plan. The cons? Lower contribution potential at moderate incomes, no Roth option, no catch-up contributions, and no loan provision. Choose based on what matters most, flexibility and features, or simplicity and ease. Both plans are powerful, just pick the one that fits your needs. Don't let perfect be the enemy of good. Start saving, and you can always adjust later. The best plan is the one you'll actually use. Ready to take action? Don't miss the deadlines. For a solo 401k, you must open the plan by December 31st to make contributions for that year. You can fund it up to your tax filing deadline. The SEP IRA is more flexible. You can open and fund it up to your tax deadline, including extensions. This makes the SEP IRA great for last-minute savers, or those unsure of their year-end profits. Setting up either plan is easy. Most major brokerages offer them online. You'll need your business's employer identification number, which you can get free from the IRS. Complete the paperwork, fund the account, and you're set. Don't let fear or procrastination stop you from securing your future. The process is simpler than you think. Take the first step today. Both the solo 401k and SEP IRA are fantastic tools for self-employed retirement savings. The right choice depends on your income, age, and how much complexity you're willing to handle. If you want maximum savings, catch-up contributions, or a Roth option, go solo 401k. If you want simplicity and flexibility, the SEP IRA is your friend. The most important thing is to start. Don't get stuck in analysis paralysis. Pick the plan that fits you best for 2025. You can always change later. You're the boss of your future. Make a decision and secure your retirement. You've earned it. Now go make it happen.